What up, boys? In this video, I'm going to be breaking down the exact model that I use to catch longs Friday morning in front of the Discord on live. If you're used to those videos that have a ton of edits and a ton of AI cutscenes and whatever, and you need your high dopamine, this isn't the video for you. This is going to be raw. We're going to get right into it and explain exactly step by step the confluences I used and where I took my profit. So, coming into Friday morning, obviously we don't get on the charts until 9:30. That's when we start looking for trades. But the first step is we want to look at the chart on the 1 hour time frame before we can go down and look at any other data, right? So 1 hour time frame, what do I see? Well, prior to Friday, price was trending up for the beginning of this week, and then middle of the week, we begin to trend down. So we're trending down, and what are we doing? As we push down, as we know the higher time frame is in a big bullish trend, all we're coming to do is fill orders, right? All we're coming to do is sweep liquidity, generate fuel, that way price can continue going higher. So all we're going to do is identify this downtrend on the 1 hour time frame, right? So we're going to identify our downtrend. We're going to identify a one high time frame liquidity sweep, and then also our high time frame key levels and draws on liquidity. So we have our trend line. We have our liquidity sweep, which was back here, right? How do I know so? Well, we have triple equal lows, right? These three levels where price has not swept below, right? Meaning that there's tons and tons of buyers orders down here, shorts take profits, buyers stop losses, right? So in order for us to continue higher, we are going to have to push down, grab these orders, right? Get fuel. That way we can continue on up. So we have our liquidity sweep on the higher time frame right back here. That's all we need to know to continue to look for longs. Now, not only do we have that liquidity sweep, but we also have a break of this trend with displacement, right? We left behind this fair value gap and this fair value gap. So all I'm doing is marking out the local fair value gaps or key levels currently, or from where price is currently at. So in this example, you can mark out this bullish gap, or if you really wanted, you can mark out this inversion or BPR, whatever you want to call it, right? So I'm going to go ahead and I'm just going to mark out this 1 hour bullish gap. From there, all I'm going to do is go down to the 5-minute time frame, and then here is where I can show you where our NFP data highs were, right? So like I said, this is just the 5-minute looking back at what we were viewing on the 1 hour before. We have the break of that trend, we have the pullback, we have the liquidity sweep. We know that we are currently bullish. Now, on the 5-minute, we want to take the exact same steps that we just took on the 1 hour, right? We want to identify our draws and liquidity, and we also want to identify any new trend lines or any gaps that could be of importance for us dependent on where we're trying to take our trade. And in this example, we're trying to take our longs. So any 5-minute gap at this point that's bearish really doesn't matter because they're all the way up here. However, what we do have and what we can identify are these two main draws in liquidity here and here. Why are these two main draws in liquidity, right? Well, number one is because this low had yet to get swept, right? That was made at 4 a.m. We tapped into that bullish gap. That low had yet to get swept or at least retraced to. Same thing down here. This low, also in that same 1 hour gap from 3:30 the day prior, yet to get touched, yet to get filled, untapped, right? So we have two untapped or unfilled draws in liquidity, and we're going to go ahead and we're going to identify those zones, right? So we're going to draw a line down there. Boom. Now, we can go up and we want to identify a take profit target. So what we're going to do is we're going to hover over this candle, and you can see here 8:30 a.m. Okay, well, what happened on Friday 8:30 a.m.? We had NFP, right? NFP, high impact news, leaves behind a big wick to the buy side and the sell side. So all that we're going to do is mark this out, right? This is going to be our data highs. And then obviously this is going to be our data lows. But because we already swept that low and that's not our main draw in liquidity for the sell side, we don't need to mark it out, right? So we have our target marked out. We have our high time frame imbalance marked out. We also have our draws in liquidity. So now all we're waiting to see is a sweep of these levels and a V-shaped reversal or some sort of confirmation on the lower time frame of these levels for us to then take longs back up to these data highs. So from there, now that we've identified the same confluences, we can go down to the 1 minute time frame and potentially look for an entry. Now, all our entry confluence is going to be is liquidity sweep and then inverse fair value gap, right? First presented inversion. Now, that can be paired with a change in state. That can be paired with a break of structure, a market structure shift, change of character. To me, it's all the same thing. All it is showing you that price was going this direction. Now we're correcting, showing you that V-shaped reversal pattern and shifting to the buy side. So what we're going to do is wait. Boom. Okay, so we now have the sweep of this liquidity, right? So you see how these 3 false pushes before never broke below that draw in liquidity, and we finally got it here, right? This leg down, this is our liquidity sweep. Cool. So now we have swept liquidity, and from there we can now identify a 1 minute fair value gap. 1 minute fair value gap right there, right? This is our bearish gap. Now all we're waiting to see is boom, that gap gets inversed, right? This is your entry. As soon as that gap gets inversed, you're taking your long with your stop loss set below that previous swing low. You can put it at the body, you can put it at the wick, regardless, just at this level, right? And then obviously you're gonna set multiple take profits within this, because yes, of course, you could hold this all the way up here. However, we could see some reactions depending on where you enter and depending on where you're looking to take profit in terms of risk to reward. So we always look to target 1 to 3s, and if I'm being honest, I entered a little bit early on this trade after this micro gap got inversed. But let's say for the point of this example, you did enter here, your stop was at the body here, right? That 1 to 3 level is only here. So that's up to you. Everybody trades a little bit differently. Personally, I target 1 to 2s, 1 to 3s. Some of the people that I trade with target 1 to 5, 1 to 6s. But me personally, I was looking at TP1 here. Why was TP1 here for me? Well, because we have triple equal highs, and then we also left a bunch of imbalances or fair value gaps behind, right? Just meaning that there's a lot of resistance in this zone. Once we get here, we're probably going to see some sharp reactions off of there. So let's go ahead and let price play out. Now that we got our inversion, we got the change in state, we got the market structure shift, breaker structure, whatever you want to call it. And from there, obviously TP1 got ran, and a little bit later, TP2, which was them NFP data highs made off of 830, got ran as well. Now we're in the ARC Academy Discord, and here you can see that the whole Discord caught those longs with us. Here you can see Brandon made $500, Drake made $100, I made $440, and continuously you can see the students' wins. If you haven't found a group that's right for you yet, we don't charge anything. There's no paywalls, no bullshit course, none of that. Everything we do is free. All that we ask is you sign up for the broker that we trade on, BitUnix. That's going to be the second link in my bio. First link in my bio is going to be the Discord. I appreciate you guys watching this video. Let me know what you want to see in the comments down below, and I will catch you next time.